Welcome back, everybody. Today, we're going to do a deep dive into Bajaj Finance's Q2 FY25 performance.
Mhm.
You know, they're a big name in Indian finance.
For sure.
And we've got their investor presentation, their auditors' reports, a press release, and even some stuff about their omnipresence strategy.
Interesting.
Yeah, a lot to unpack here.
Yeah.
Growth numbers, new business ventures, updates on their credit quality, and they're going for like 100 million customers.
Wow.
Yeah. So before we really get into it, what jumps out at you at Bajaj Finance?
Well, their growth is definitely eye-catching, especially with how the economy is right now.
Right. And you were asking about how they're expanding. Well,
Yeah.
their assets under management, their AUM, just jumped by 29% year over year.
Really?
Yeah, that's 373,924 crore.
Wow.
Yeah, which is basically $45.6 billion.
It's amazing how non-banking financial companies like Bajaj Finance are becoming so big in India.
Yeah.
Like they're filling a space that traditional banks aren't always hitting.
Exactly. And it's not even just their core businesses either.
Yeah.
Like new business lines are already adding 2 to 3% to that AUM growth.
Wow.
So they're branching out.
Yeah.
And they've booked over 9.69 million new loans this quarter.
That many.
Yeah, that's 14% up from last year.
Speaking of branching out, that makes me think about their goal of getting 15 to 16 million new customers this year.
Yeah.
Like they're trying to hit 100 million customers.
It's like they're building a financial empire.
Right.
But why is getting more customers so important?
Well, think of it like this. More customers means more market share, yeah, a bigger piece of the pie,
Yeah.
plus more chances to offer them other financial products, and the big one, a chance to build relationships with them, not just quick transactions, you know.
Yeah, totally. And their omnipresence strategy is pretty interesting.
Oh, yeah. What about it?
Well, loans through their Bajaj Mall platform are up 35% year over year. And insurance policies sold through their platform have gone up by 175%.
Seriously.
Yeah.
That really shows that their plan to become a one-stop shop is working, you know.
Yeah.
They're all about convenience and having lots of solutions all under Bajaj Finance.
All right, let's talk about the bottom line, the money.
Okay.
Their net total income grew by 24%
Wow.
to 10,946 crore,
Which is
which is about $1.3 billion.
okay.
Not bad,
Right.
right?
Not at all.
And remember, net total income isn't just interest from loans.
Right.
It's also fees, commissions, all kinds of stuff.
Yeah, it gives you a fuller picture of where their money's coming from.
Exactly. And their profit after tax paid increased by 13%,
Nice.
reaching 4,014 crore, about $489 million. And there's always a but.
Right.
This PATE growth wasn't as strong as in past quarters, and their return on assets, their ROA, dipped a bit to 4.48%.
So this is where we get that mixed quarter story. Yeah. Yeah.
Remember those loan losses we talked about?
Yeah.
Well, they've impacted their profits.
Yeah.
Now, Bajaj Finance says that the ratio of loan losses to average assets under finance, their AUF, will go down to 2% by the fourth quarter of FY25. We'll see what happens.
They are trying to tighten things up, though.
How so?
Well, in their investor presentation, they talk about focusing on operational efficiency. Their OPEX, that's operating expenses to net total income ratio, got better, going down to 33.2%.
Okay.
And they're even using artificial intelligence,
Oh, really?
Gen AI specifically, to boost productivity.
That's interesting.
Yeah.
You know, efficiency is a big deal for any financial company.
Yeah.
A more efficient company can maybe offer better rates to people like you and me.
Yeah.
And it shows they're thinking long-term about sustainability.
Okay, time to talk about the elephant in the room.
Hmm.
Their gross non-performing assets, or GNPAs, and net NPAs have gone up.
Oh, yeah.
They're at 1.06% and 0.46%. Well, any increase in NPAs is something to watch.
Right.
But let's keep things in perspective.
Okay.
These numbers are still super low compared to others in the industry. It's not a crisis yet.
Right. So let's look closer at those loan losses.
Okay.
Their analysis from the investor presentation points to people with 3 or more live unsecured loans being more likely to default.
That makes sense.
Yeah.
And it might mean they need to adjust their risk models, you know.
Yeah.
It's good that they're already tightening up their lending for those people.
That's proactive.
Yeah.
Here's something else that's interesting.
What's that?
Bajaj Finance's financing of Bajaj Auto vehicles has gone down a lot.
Really, why?
It seems Bajaj Auto started its own financing arm, Bajaj Auto Credit Limited, or BACL.
So that's a big change in the auto financing world.
It is.
But Bajaj Finance isn't just sitting back. They're actually growing their non-Bajaj auto two-wheeler financing business.
Oh, okay.
They see it as a huge opportunity.
So they're adapting,
Right.
like we were saying.
Yeah, finding new ways to grow.
Cool. So even with some bumps, they're in it for the long haul. And they've even given us some long-term guidance on some key financial metrics.
Oh, really? Like what?
Well, they're projecting AUM growth between 25 and 27%, profit growth between 23 and 24%, and ROA in the 4.6 to 4.8% range.
Okay.
They also want to keep those NPAs down,
Yeah.
projecting them to stay between 1.2 and 1.4% for gross NPAs and 0.4 and 0.5% for net NPAs.
So ambitious goals.
They're also targeting ROE, that's return on equity, between 21 and 23%.
Wow, they've got a lot planned.
They do, but they find some strengths that can help them reach these goals.
Like what?
They've got strong brand equity and trust being part of the Bajaj Group. They focus on the mass, affluent, and above customer segment. They've got a good cross-selling strategy for various financial products. And they're using data technology and analytics to make decisions.
That's a good toolkit.
It is. Before we get into specific business segments, I'm curious what surprised you the most about Bajaj Finance's performance this quarter?
Well, I'm really intrigued by how much their omnipresent strategy
Yeah.
is growing.
Yeah.
It really shows they want to be more than just a lender and become a full-on financial services provider.
Totally agree. And their efforts to diversify are definitely something to watch.
Yeah.
So now let's zoom in on their different business units and see how they're doing.
Okay.
First up, mortgages and BHFL, which had a combined AUM of 1,015,836 crore.
So that's a jump of 27% year over year.
Yeah.
A big chunk of their overall AUM growth.
Yeah.
They're seeing strong demand in the mortgage market for sure.
Mm-hmm.
Home loans are leading the way, followed by loans against property and lease rental discounting.
Interesting. And while we're talking mortgages, let's focus on Bajaj Housing Finance Limited, BHFL.
Okay.
Their home loan AUM grew by 24%.
Solid performance.
Yeah, a good showing in that segment.
Mm-hmm.
And their loan against property segment did even better. Yeah, growing by 31%.
Wow.
But the biggest jump was in their developer financing AUM, which went up by 56%.
It's huge.
It tells me that the real estate sector in India is still booming.
Yeah, it seems like it's in.
So to see the bigger picture, let's break down their consolidated AUM by business segment.
Right.
Their 2- and 3-wheeler financing, which has always been strong for them, saw a 15% increase,
Okay.
reaching 18,960 crore.
But if we look closer, a big part of that growth is from non-Bajaj Auto two-wheeler financing.
Right.
Remember that shift with BACL we were talking about?
Yeah.
They're working hard to get market share outside of their own financing business.
Adapting to change.
Yep.
Okay, next, urban sales finance, which includes things like consumer durable loans and digital product financing. It grew by 18% to reach 27,169 crore.
That segment really shows how much buying power urban consumers have.
Yeah. Okay.
And how willing they are to use financing for different products. I think this trend will keep going as India's urban population grows and people spend more.
Makes sense. Their urban B2C loans, which include personal loans, had an even bigger jump, 33%,
Wow.
reaching 77,239 crore.
Personal loans are definitely driving growth for Bajaj Finance.
Yeah.
And it's not surprising there's a growing need for credit for all sorts of things. Travel, education, medical bills, consolidating debt.
Now, let's not forget about their rural business.
Okay.
Rural sales finance grew by 32%.
That's
To
great.
7,280 crore.
That shows how much effort they're putting into reaching rural markets
Yeah,
and giving financial access to people who may not have had it before.
right.
This segment has huge potential as incomes rise in rural areas and people have more access to financial products.
Their rural B2C loans also went up by 10%, reaching 18,815 crore.
That's a good sign that they're getting traction by offering credit solutions that are made for the specific needs of rural customers.
And gold loans, which people often see as a safe bet during uncertain times, went up by 74%.
Seriously.
Yeah, reaching 6,363 crore.
Gold loans are really popular in India,
Mm-hmm.
and Bajaj Finance is definitely taking advantage of that demand.
Yeah.
Plus, it's a pretty low-risk segment for lenders because the loan is backed by gold, which is a real asset.
Okay, moving on to their SME lending business.
Okay.
It showed good growth, 29%, reaching 44,382 crore.
That's a good sign that the small and medium enterprise sector in India is doing well.
Yeah.
Bajaj Finance plays a big role in giving credit to these businesses, which are often the backbone of the economy.
And their car loan business more than doubled,
Whoa.
going up by 128% to reach 9,906 crore.
Wow, they're really tapping into that car market in India.
Yeah, where more and more people are buying cars.
It makes sense.
Finally, their commercial lending business saw a 26% increase, reaching 24,615 crore.
So they're focusing on mid-market corporates. It shows how they're providing financing to businesses of all sizes.
Phew.
Yeah,
That was a lot.
it will.
A whole rundown of their business segments.
Definitely.
But there's more to the story than just AUM growth.
Right.
Let's dig into the quality of those assets,
Okay.
starting with their non-performing assets.
All right.
So let's break down their stage-wise ECL provisioning.
Okay.
ECL stands for expected credit loss, and it gives us a closer look at their credit quality.
Mhm.
Basically, the higher the stage, the higher the risk of default.
Okay. So how are they looking?
Well, for their whole portfolio, stage 1 assets, which are the least risky, make up the bulk over 98%,
That's good.
which is reassuring.
Yeah.
But we are seeing a slight increase in stage 2 and stage 3 assets compared to before.
That makes sense with the whole trend of rising NPAs we've been talking about.
Yeah, and if we look at specific segments, we see some interesting differences.
Like what?
Well, in their 2- and 3-wheeler financing, almost 11% are stage 3 assets, the riskiest ones. That's worth keeping an eye on.
Yeah, but their mortgages segment has a much lower proportion of stage 3 assets.
How much?
Only about 0.5%.
Probably because those loans are secured by property.
Exactly. The type of asset backing a loan makes a big difference in how risky it is.
Yeah, for sure.
And let's not forget about Bajaj Housing Finance Ltd, BHFL.
Okay.
Their stage 3 assets are also pretty low, around 0.5%.
They're doing a good job managing credit quality in their mortgage portfolio.
All right, let's move on and take a closer look at Bajaj Finance's risk management practices.
Okay.
They've given us a detailed breakdown of their loan portfolio by borrower type, showing their exposure to different segments.
That's helpful for getting a sense of their overall risk.
Yeah, for instance, personal loans are a big part of their portfolio.
Right.
And those are inherently riskier than secured loans like mortgages.
Yeah, that makes sense.
They've also shared data on how they plan to handle loans that have become NPAs.
Which gives us an idea of how they're trying to recover those bad loans.
Any lender needs good ways of dealing with NPAs.
Yeah.
This data shows they're working with borrowers to find solutions.
And we can't forget about the recent changes in regulations.
Right.
Bajaj Finance has given lots of details on their security cover for different debt securities to show they're complying with the latest SEBI regulations.
Regulatory compliance is so important for any financial institution.
Yeah.
And these reports give transparency and reassurance to investors and regulators.
They've also included a certificate from their CFO on how they're using the money from commercial paper issuance.
Oh, interesting.
This makes sure those funds are used for what they said they'd be used for.
Yeah, that's
in their offering documents.
Right. It adds another layer of transparency and accountability.
Exactly. Which is important for keeping investors confident.
For sure.
Okay, before we move on, what are your thoughts on Bajaj Finance's credit quality and risk management based on what we've seen so far?
Well, it's important to remember that no investment is total risk-free.
Right.
Bajaj Finance is a strong company, but they're working in a tricky environment with its own challenges.
Totally agree.
Yeah.
Now, here's something for you to think about as we head into the next section.
Okay.
Given the slight increase in NPAs, what could Bajaj Finance do to make their risk management even better?
That's a great question.
Yeah.
Could they use things like Gen AI, which they're already using for efficiency in credit assessment and early warning systems?
Interesting thought. Stay tuned as we dig deeper in part 2 of our deep dive into Bajaj Finance's Q2 FY25 performance. So we talked about those NPAs going up a bit, and it seems like Bajaj Finance is making some changes to their lending, especially for folks with lots of unsecured loans. But what else could they do? I mean, technology's changing so fast, right?
Right.
Could they use that to their advantage?
You're right on the money.
Yeah.
Their presentation talked about using Gen AI to make things more efficient. But imagine using that same power for figuring out risk.
No, okay.
What if AI could look at tons of data,
Mm-hmm.
spot patterns, and predict who might default on their loans,
Yeah,
and do it better than the old ways of doing things?
right.
That could be a total game changer.
Now that you mention it, yeah, that makes a lot of sense.
Right.
They could build these like super smart systems that flag risky borrowers before they even give out a loan,
Exactly.
like a crystal ball for creditworthiness.
Right. And it doesn't stop there.
Oh, okay.
Think about AI keeping an eye on how borrowers are doing and raising a flag if anything changes that might make them more likely to default.
So you could catch it early.
Exactly.
Yeah.
You could step in early, maybe restructure the loan or offer some financial guidance.
That's more proactive.
It is.
And even kind of empathetic, right?
Yeah, it's not just about saying no to loans.
Yeah.
It's about helping borrowers and stopping those risks from turning into big problems.
So we're talking about going beyond those old credit score models.
Right. The ones that only use a little bit of data.
Yeah.
AI can paint a much bigger and clearer picture of how healthy someone's finances are, which means you can make better guesses about whether they'll pay back their loans.
Okay, so AI could really change how Bajaj Finance manages risk.
For sure.
But let's not forget about people.
Right.
They'll still need good underwriters and analysts to understand what the AI is telling them.
Oh, absolutely.
Yeah.
AI is a tool. It's not replacing human judgment.
Right.
The best way is to have AI and human expertise working together.
Yeah, teamwork makes the dream work.
Exactly.
All right, let's switch gears a bit and talk about how Bajaj Finance gets their money and how much capital they have.
Okay.
These are super important for any financial institution.
They are.
Right.
A good funding strategy means they have the cash they need to grow. And capital adequacy shows how strong they are financially and whether they can handle tough times.
Right, like if the economy takes a hit or there's a sudden jump in loan defaults.
Exactly.
So how are they doing in these areas?
Well, their investor presentation says they want to get money from lots of different places. They're aiming for deposits to be 25% of their total borrowing.
Okay.
That's smart.
Why?
Because relying too much on just one source of money can be risky.
Right.
By spreading things out,
Yeah.
they're lowering their risk and getting a more stable flow of capital.
They also mention focusing on long-term borrowing,
Makes sense.
which seems logical.
Yeah.
Since they offer loans that last a long time.
Exactly. They need to match how long it takes for them to get their money back
Yeah.
with how long it takes for them to pay back what they've borrowed. That's super important for managing interest rate risk
Right.
and making sure they have enough cash when they need it.
So they've got a solid plan for getting money.
Yeah, it seems like it.
What about capital adequacy?
Well, their presentation says they have a capital adequacy ratio of 21.69%
Okay.
and Tier 1 capital at 20.90%.
Those sound pretty good.
They are.
Yeah.
Capital adequacy ratios are like a report card for financial institutions.
Okay.
Regulators use them to see how healthy banks are. Bajaj Finance's ratios are way above what's required,
Okay.
which means they're in a good spot financially
Yeah.
and they can handle potential losses.
That's good to hear.
Yeah.
Now let's look at how their different funding sources have changed over time.
Okay.
Their consolidated liability mix shows they rely on money markets, banks, and deposits, with a smaller amount from external commercial borrowings.
Interesting. It seems like they've been moving away from external commercial borrowings recently.
Yeah.
Maybe they're trying to rely less on foreign currency debt and lower their currency risk.
Makes sense.
Yeah.
They also gave us a detailed breakdown of their standalone liability mix, which shows they're using more deposits compared to the consolidated level.
That suggests their subsidiary, Bajaj Housing Finance Ltd, probably uses fewer deposits for funding, which is pretty normal for housing finance companies.
Okay.
They often use more bank borrowings and stuff from the capital market.
All right, let's talk about their asset liability management, ALM.
Okay.
Their presentation talks about using a behavioralized ALM approach.
What does that even mean?
Well, think of it as a really fancy way of managing assets and liabilities.
Okay.
It's more than just matching maturities. They're probably using some complicated models
Right.
to guess how things like interest rates, prepayments, and other stuff might affect their cash flow and risk.
So they're not just reacting.
Right.
They're trying to predict changes and changing their funding and investment strategies to manage those risks.
Exactly. And they also mentioned keeping conservative leverage standards.
That's smart, especially now with the economy the way it is. Conservative leverage means they're not taking on too much debt.
Right.
It shows they're being careful with their money
Yeah.
and that they care about being stable in the long term.
That makes sense. But let's explain this to the average person.
Okay.
Why should anyone care about how Bajaj Finance gets its money or how much capital it has?
It comes down to trust and stability.
Okay.
If a financial institution is well-funded and well-capitalized, it's more likely to be around for a long time.
Right.
They're better equipped to deal with tough times
Yeah.
and keep providing services to customers even when things are rough.
So if someone's thinking about getting a loan from Bajaj Finance or buying their stock,
Yeah.
these things give them some peace of mind.
Right, that they're dealing with a company that's reliable and financially sound.
Exactly.
It's all about checking how strong and stable the company is.
Right, the company you're trusting with your money.
Yeah.
Before we go to the next section, what impressed you the most about how Bajaj Finance handles their funding and capital?
I'm really impressed by how they're getting money from different sources
Yeah.
and how careful they are about not taking on too much debt.
Mm-hmm.
It shows they're thinking long-term and focusing on sustainability
Yeah.
as an investor. I like
I
that.
agree. It shows how disciplined they are with their finances and how well they manage risk. All right, now let's dive into their omnipresence strategy.
Okay.
It's clear they want to be more than just a lender.
Right. They're creating a whole world where customers can get all sorts of financial products and services,
Yeah.
all under the Bajaj Finance umbrella.
Like a one-stop shop for everything money-related.
Exactly.
Their presentation shows some big growth in their omnipresence metrics.
Oh, yeah. Like what?
Loans through their Bajaj Mall platform are up 35% year over year.
Wow.
And insurance policies sold through their platform have jumped by 175%.
That's huge.
It is.
It really shows their strategy is working,
Yeah.
especially with customers who like things to be easy and convenient.
They've also seen good growth in other areas,
Like what?
like getting new digital EMI card users and selling co-branded credit cards.
So they're really expanding online.
They are. They're meeting customers where they are.
Yeah.
And these days, that's online.
Right.
Their digital platforms like the Bajaj FinServe app are becoming key for getting new customers and keeping them engaged.
And with over 61.67 million people using their app,
Yeah.
they've got a built-in audience for cross-selling.
Right. They can offer those customers other products and services.
Exactly.
It's the omnipresence strategy in action.
It is.
But let's zoom out for a sec.
Okay.
What does this mean for Bajaj Finance's future?
Well, it suggests they're not just a lender anymore.
Yeah.
They're becoming a more well-rounded financial services company.
Okay.
They're building a whole system that includes lending payments, insurance investments,
Yeah.
you name it.
So they want to be that one-stop shop. It's a big goal.
It is.
But how well they're doing with this omnipresence strategy so far.
Yeah.
The shows they might just pull it off.
It'll be interesting to see how they develop this strategy
Mm-hmm.
and if they can keep up this momentum.
Yeah.
They'll have to deal with a lot of regulations,
Right.
competition from traditional companies and fintech companies,
Mm-hmm.
and they have to keep innovating to keep up with what customers want.
A lot to handle.
It is.
Before we finish this section, what about their omnipresence strategy really caught your attention?
Well, how fast they're growing online is amazing.
Yeah.
They're using technology to make things really easy for customers and build this complete financial services world.
Yeah.
The bold plan, and they're doing well so far.
I agree. It shows how good they are at adapting and trying new things.
Definitely.
All right, everyone listening, what are your thoughts on Bajaj Finance's omnipresence strategy?
Do you think it's a good way to grow in the long run?
Yeah, or are there some things they need to be careful about?
It's something to think about.
Yeah.
As we go into the last part of our deep dive, we'll talk about some of the potential challenges and opportunities for Bajaj Finance in this changing world.
Stay tuned for the final part of our deep dive into Bajaj Finance's Q2 FY25 performance. Welcome back to the final part of our deep dive into Bajaj Finance's Q2 FY25 performance. We've covered so much already.
Yeah.
Their impressive growth, a few bumps with credit quality, their funding strategy, and that big omnipresence plan.
Yeah, it's been quite a journey through their financials.
It has. But before we wrap up, let's step back.
Okay.
Look at the bigger picture.
Yeah.
Where's Bajaj Finance going? Are they on the right track, or are there some roadblocks ahead?
That's the question, isn't it?
Yeah.
I think Bajaj Finance is at a crossroads.
Okay.
They've really made a name for themselves in Indian financial services, but things are changing, and they're facing a whole new set of challenges and opportunities.
Let's break that down. What are some of the big challenges they need to tackle?
Okay.
We talked about those rising NPAs and the changes in the auto financing market.
Yeah.
What else are you thinking about?
Competition. That's a big one.
Okay.
It's not just traditional banks anymore.
Right.
Fintech companies are changing the game.
Yeah.
They're offering new products and services, and they're going after specific groups of customers that traditional companies haven't really focused on.
It's a whole new world out there.
It is.
And we can't forget about all the regulations.
Right.
India's financial sector has a lot of rules, and those rules are always changing.
Yeah,
Bajaj Finance needs to be flexible
for sure.
to keep up.
Absolutely, compliance is huge, and any mistakes can cost them.
Yeah. Money and their reputation.
Exactly.
Plus, they need to manage the risks that come with expanding so quickly online.
Right. Cybersecurity threats are getting worse.
Yeah.
And if their data gets leaked or their systems crash, it could really hurt people's trust in them.
So yeah, they've got a lot to handle.
They do.
But let's not forget about the good stuff.
Right. The opportunity.
India's economy is growing fast.
Yeah.
Which means more and more people need financial products and services. Bajaj Finance is in a great position to take advantage of that growth,
I agree.
especially with their strong brand and all those customers.
Right. They're already branching out.
Yeah.
Moving beyond just lending and building that ecosystem with payments, insurance, investments, the whole shebang.
That omnipresent strategy is a big move.
It is.
And they're doing well so far.
Yeah, that's promising.
And we can't forget about technology.
Right.
They're already using AI to be more efficient. But think about what they could do with it in risk management, or customer service, or even creating new products.
Absolutely. Technology is the key to innovation and growth.
Yeah.
And Bajaj Finance seems to understand that they're investing in their digital systems and using data to make decisions. That's going to be super important for them in the long run.
So even though there are challenges ahead,
Yeah.
they seem ready to face them
Yeah.
and grab those opportunities.
It's going to be interesting to watch.
Sorry, before we wrap up our deep dive,
Okay.
let's hear from you, our listener.
Yeah. What are your takeaways from all this?
What stood out to you?
And what questions do you still have?
We've uncovered a lot about Bajaj Finance.
Yeah, their growth, their challenges, their vision for the future.
So what do you think? Bajaj Finance is a really interesting company,
It is.
operating in a fast-paced and ever-changing industry.
For sure.
We hope this deep dive has given you a better understanding of how they're doing and what might be next for them.
Remember, knowledge is power,
It is.
especially when it comes to your money.
Yeah. Stay informed, stay curious.
And keep exploring the world of finance.
Thanks for joining us on this deep dive.
We'll see you next time.